What's going on, everybody? It's your boy C-Zar, and we are talking about XYO today. Hit that like button, you guys. Subscribe if you want to see more content like this. Let's get into it, okay? Let's talk about it here. Here we are at 1.7 cents right now, firmly in place in this bull flag here, right? We've got this very nice pronounced bull flag there. If it is a bull flag, and I think it is a bull flag, from a low to a high, that's your flag pole right there. If you put it at the base of the flag, you put that measurement at the base of the flag there. Got to get it right to the base. Come on, right there. The measure move would take you all the way up to about 12.17 cents. From a price right now at about 1.7 cents, that gives you an overall growth of something about a 7x, right? 7x for the measure move of what we presume to be, and I very much confidently feel that this is a bull flag, right? So 7x is on its way. That's the measure move. Now, measure moves are not requirements. They're not prophecies. They're not written in a stone tablet in a cave somewhere, right? It's just an idea. They don't have to happen. You can fall short of it. You can meet it exactly. You could even go beyond that, right? And I think that you might actually stand a chance at going beyond your measure move. The reason why is because this measure move here takes you above your all-time high, which sets you up for two things, right? Or maybe even three things. One of which is kind of weird. One, the thing that wouldn't be weird would be that you find resistance just below your measure move at your all-time high. You find resistance there. Okay, that's pretty common. The second thing, which would be kind of weird, would be that you break just above your all-time high. An all-time high from years ago, from last cycle, you break just above it to find resistance there. Normally when you break above it, you keep going for a little bit. Or again, the third option would be, not finding resistance right at it, not finding resistance just below it, but finding some resistance a little bit further up. And if you were to find resistance further up from a high to a low, the measure move that I would give you, actually I'm going to measure it down to here, or the expectation I would give is 21 cents to 34 cents, personally. And you could go higher, sure, you could go higher, but at least 21 cents. To me, the least likely thing to happen would be that you actually hit this measure move. You would either fall just short of it or exceed it just a little bit. But with that, we do have a range, something between 34 cents to, let's just say, 8 cents, with a very high expectation of something to be around 20 cents itself, 21 cents there. Anything can happen. You absolutely can. And there have been moments where you see charts move up and they don't hit their 1272. They just find resistance right here in the middle of nowhere. It happens. It can happen, especially whenever you're coming back from such a far place, all the way back down to the FIB retracement here. I'm going to delete this and just draw a new one up there so we don't have all the white lines. High to low here. Especially whenever you're starting so far down here, it can happen, or it can make sense that you don't reach for the 1272. That could happen. But being that you hit your 786, pulled back to your 0.5, been consolidating right here below the golden ratio, I have a feeling that you don't stop at the 886. So I'm very confident that 8.3 cents to 34 cents is on the table, but very, very likely 21 cents or something around there would be what I would expect to see. If we look at the weekly RSI, you look at the weekly RSI here, you're in a very nice pronounced uptrend, higher lows, higher highs, right? You're getting ready right now just below the 60. It'd be nice if you found support just above the 60, but very clearly you don't need to do that. You've actually gotten overbought before and then came back down and found support just below where you're at now, but basically in the same area. And then you went to the overbought zone again. What did that do for your price? You saw a move like this, right? You came down, rounded bottom, moved up, had a bull flag here, and then you continued that move, right? Kind of like this, where you came down, had a rounded bottom, you moved up, you had a bull flag here, and then, I don't know, maybe you do this. It's basically the exact same thing as this, but on a bigger scale. It's even equivalent on an RSI perspective, right? Just on actually a higher scale. Even on the RSI factor, it's a higher scale. Higher low or higher highs here, higher lows there. Overall, more bullish posturing here, right? You're coming from bouncing right off the oversold zone instead of in it for a while. It's just you're in a more established uptrend. It would make sense to me, in other words, that not only would you see a move that's equivalent to what you saw that led you into this flag here, but it would make sense. It would absolutely make sense that you see something that's a little bit more than this move, which would be the measure move of the bull flag. So as this video goes on, guys, I'm increasingly becoming confident that something above 20 cents is what you're in for. I don't think you stop at 12 cents, 13 cents, or lower, but you could. Again, it's important to be aware of these kind of things. All of your possibilities, all of your targets. high to low here, 1618 down to the 886, very common maneuver to make. I would expect you to go to your 2618 right from here. 2618 is all the way up at 16.4 cents. If you get above that, your 2886 is at 24 to 33 cents, and these are targets that we're looking for, right? That's that target area that we're looking for, so that makes more sense to me. But with this, the way that it looks, I have to say this fib right here is the most compelling to me, that you would stop below 20 cents. 16.4 cents though, which would still take you above the expected measured move of this bull flag. So that still agrees with the fact that you will see a stronger move than what brought you into this, right? 16.4 cents, 24 cents, 33 cents. It's a big range, but I truthfully do expect that you will see something above 20 cents. But at a bare minimum, I'm growing to accept maybe 16.5 cents could be a good stopping point, okay? Just by ways of the fibs here. But if you go, mark my words, man, you go above 16.5 cents, you're not stopping until you hit 24 cents, okay? Maybe even then 33 cents. Mark my words, okay? Weekly RSI looks good. 3-day RSI, a bit neutral. Ping-ponging between the 40, bouncing off the 40, rejecting the 60. Once you pick a side, once you get above the 60 or below the 40, you'll pick a side and likely you'll break out of this range here. So I'm assuming you'll break out to the upside. We've got 21 hours, 23 minutes left in this 3-day time frame. Could this be the day today that you start seeing some movement up and breaking above the 60 here? I mean, maybe. I would need to see you get above, within the next 21 hours, I need to see you get above like 2.2 cents. So I don't think that's going to happen, but maybe it does. You never know. Looking at the daily time frame. Daily time frame, neutral, but kind of, I don't know. I guess it's more bearish than it is bullish. It's very neutral. It's very, very neutral. And this price action is very neutral too. It kind of looks like a diamond bottom, right? You've got the diamond shape there at the bottom. It's so weird, but to be completely fair, diamond patterns are weird. They're very weird. So the fact that it looks weird just makes me think even more that that's a diamond bottom right there. If it is a true diamond bottom, you likely are going to break out soon. We're on a daily basis. By the end of this week, right, because we have 2 days, 22 hours left in this week, we're going to break. Diamond patterns are known to have high velocity moves. So when you break out, it's a very fast move, kind of like this, right? It makes sense. They're also known to be very volatile. So if you break to the downside high velocity, you could see something that fakes you out, that breaks down like this, and then boom, immediately rips back to the upside. You can see something that rips to the upside, boom, it rips back down to the downside. In fact, diamonds are notorious for this false breakout where they'll break out fast and then they'll pull back up where the breakout point was. They'll pull back up through it and exceed through it. So all that to say, you know, if it breaks higher, that's good, that's encouraging, but don't get too encouraged, right? Because you could see it come back down. Don't get discouraged if it does come back down. That's just normal behavior in the pattern, and likely it could continue running higher as well. I said likely it could, likely it would run higher. And then even here, same thing. If it breaks down, don't get discouraged because likely you would just pull back up. And if you get above these highs, I would assume that you're on your way to highs higher than this. All that to say, you guys, I think over the coming days, probably by the end of this week, we'll see a breakout. If it's to the upside, it's not necessarily a cause for excitement. If it's to the downside, it's not a cause for concern. I would say I'm concerned. I would be concerned if we got, let's see, let's get a fib here to get an actual. Yeah, if you got below these lows, I'd be concerned. But you'd have to close below them, not just wick below them, close below them. If you get above these highs at 2.415 cents, yeah, I'd be excited, yeah. But on a closing basis, either way, right? If you just wick, it's not exciting enough. So I hope that's good. I hope that everybody took something away from this video. I do suspect that we'll break out to the upside, but again, if it goes to the downside, whatever, it's fine. It might not even be a diamond pattern. Again, this one's kind of ugly, but diamonds are kind of ugly. In the real world, they're beautiful, but in the charts, man, they're known to be ugly. So diamond, no diamond, whatever, it's a bull flag, however you want to look at it. I very much believe that 16.5 cents is a good minimum target. 33 cents is a good maximum. Likely we go somewhere between 20 and 25 cents. You're at 1.7 cents now. That's awesome, man. And I expect that that price is achieved. You fully reach this 20 cent price target area by the end of March. That's my thoughts. So hit the like button, you guys. Subscribe if you want to see more content like this. Every time I make a video, I'm like, I got to buy some XYO, man. It's really at a great position right here, right? I mean, not many people would tell you from a relative low in September to the price now being up 335%. I'm sure you're not going to find too many people that are saying it's an ideal price to buy, but man, you broke out above this previous area of resistance right here. You're finding support on it now. Like it's picture perfect. It looks like a very clear defined bull flag. I mean, it's perfect. There's no doubt in my mind whatsoever that you're about to see a move that takes you to new all-time highs. And it's going to start. It's probably going to start. This move will start by the end of this week, if not sometime very early next week. Like next week, it's starting, man. By the end of this month, it's gonna be a lot more pronounced. Anyways, that's all I got, guys. Take it easy. See you on the next one. Bye-bye.